makambo ona makambo ona makambo ngai na makambo munu para kile bachuli balutua lutua munu wekluwe lutua munu wekluwe ona makambo ngai na makambo
Hello everyone, my name is Shahin Amini. I am Investor Relations and Commercial Manager for Africa Oil Corp. And I'm going to run through our first quarter 2023 results. But I think this will be a good opportunity for me to, again, quickly run through this slide and reiterate some of the messages. It was a very good quarter for us from a financial operational. I suppose it's fair to say that it wasn't that eventful. But on the highlights, I think obviously one area that everyone is very excited and looking to is the start of our Venus appraisal campaign offshore Namibia. Those of you that are following the story very closely know that Tungsten Explorer, a drill ship, started drilling of Venus 1A appraisal well in February. And now we have a second drilling rig, Deep Sea Mira, which is a semi-submersible, is in fact now in Namibian waters, and it should be joining the campaign very shortly. In other parts of our portfolio, and for those of you that know the company well, the core of our business is production in Nigeria. And I'm delighted that after some delay, we have started infill drilling, and this is development drilling, on Egina oil field in OML 130 offshore Nigeria. One area that I'm very proud of in terms of the company's performance is our shareholder capital returns. We did distribute a semi-annual dividend earlier this year. And I think what is very important to highlight here is that in the last 12 months, since end of March 2022, we have returned more than $80 million to our shareholders through the dividend policy and through a share buyback. We had a consolidated net debt of $3.5 million. What does that mean? Well, at the Africa Oil corporate level, if you look at the corporate level balance sheet, we are debt-free and we have a cash position of close to $160 million US. We have 50% of Prime Oil and Gas, which holds our Nigerian assets. At the Prime level, they do have an RBL and they do have outstanding debt. There's also a pre-export finance facility. If you take the aggregate debt outstanding and deduct the cash position, the Prime net debt position, net to our 50% shareholding, is about $162 million. And that's how we get to a consolidated net of $3.5 million. And I think it's important to highlight that Prime has very robust debt position. Its net debt to EBITDA is at a very conservative 0.3 times on a last 12 months basis. Subsequent to the period end, we did actually stood our corner in Impact Oil and Gas Limited. Now, we, as I mentioned, obviously a very exciting area for the shareholders is Namibia exploration and appraisal campaign. And our interest in the Venus oil discovery is through our shareholding in Impact. So subsequent to the period end, Impact raised money for this year's drilling campaign, and we stood our corner and we subscribed for close to 40 million shares for 31.4 million. We will ultimately hold 31.1% shareholding in Impact. So let's look closer at the Namibian drilling campaign. And I think what is really interesting here is that the operator, the French supermajor TotalEnergies, has actually presented on this block in the year-end results, and they have referred to it as the possible golden block. So the excitement isn't just for us as an independent oil and gas company and for our shareholders, it's also very meaningful for a major. The campaign, which is currently underway, if successful, could underpin a fast-track development for the core Venus area. And that's where currently the Tungsten Explorer is drilling Venus 1A. Dipsy Mira is planned to join the campaign and run the first flow test on, and as it's currently planned, on Venus 1A. And that's going to be an important part of the program, because although we have very good, important, and encouraging static data from the work done to date, we're still waiting for crucial dynamic data on flow rates from the reservoir. And that is something that we're all looking forward to. And as you can see, there's a simplified Gantt chart at the bottom of this chart that shows a possible sequence of the work program. And this is something that we took from a Total presentation. Sorry, I should say a Total Energies presentation. So turning the attention to our core producing assets, as I mentioned earlier, we have started the infill drilling campaign on Egina. And this started after some delays. We were really hoping that this could have started about a year ago, but because of certain issues, it took longer than expected to get the rig on location and start drilling. And we will update the markets in due course. The program could be up to 9 wells on Egina and Akpo, both are producing fields in OML 130. And I think it's also important to highlight that OML 130 gives us a very attractive balanced portfolio of production and development. There is a Preowei field, which is an undeveloped discovery, and that is a candidate for a subsea tieback to the Egina field. And one of the outstanding items for us as a shareholder in Prime and for our interest in OML 130 is the renewal of this license. And there are positive signals that good progress is being made. And again, we hope to update the market and our shareholders soon on that front. Our production performance during the first quarter was as expected. In fact, it was towards the higher end of our management guidance for the year. And as of now, we expect that our full year guidance remains good. So we have no reason to revise that after the performance of the first quarter 2023. Our oil sales, and I think this has been kind of a hot topic of discussion for our shareholders and analysts, in that traditionally Prime, our investee company, would use forward sales contracts to secure, or fix the oil price sales prices. The strategy was slightly tweaked about a year ago, whereby we don't actually fix the prices, and we set a trigger mechanism. And that mechanism, I don't want to go into the detail. You can find the information on it in our management discussion and analysis and in our annual information form. And I suppose all I want to highlight here is that, as you can see, the sales revenue achieved from middle of last year to date has improved significantly under this revised strategy. So the dark bars are the sales price achieved by Prime, and the lighter grey bars are the dated Brent at the time of sale. So we are actually achieving a premium, if not in line with spot prices, and we're very pleased with that. Capital expenditure. Now, look, we closed the acquisition of a 50% shareholding in Prime in 2020, in January 2020. And there's been very little money spent on these assets. They've really been a cash cow. They've generated a significant cash flow from operations, and the capital expenditure has been insignificant. But now, with the start of the infill drilling on OML 130, that capital expenditure is picking up, and that is a good thing. You have to spend money on these deep water fields in order to make money through arrest of decline of production, and also looking to add incremental production. So in terms of financial highlights, here you have the Africa Oil net income in fourth quarter 2022. Just as a reminder, we had a large non-cash impairment on Kenya. And I can talk about Kenya in the Q&A session after the end of this slide presentation. And again, we are pleased. Our acquisition in Prime has underpinned positive net income other than that fourth quarter 22, which was exceptional, because of that non-cash impairment, have been stable and robust. Turning to our invested company Prime, which is really driving our cash flows, is driving the business. It is the heart of the business. As you can see, the dark blue bars are EBITDAX, and they've been quite robust over the past quarters, many quarters. And you can also see the performance in terms of cash flow from operations, and that is before working capital adjustments. So we are very pleased with this. This has been a very well-oiled machine, and I suppose we should congratulate our colleagues at Prime and also the operators. We have Chevron on OML 127 operating Agbami field, and Total Energies on OML 130 operating Akpo and Egina fields. They have performed very well, and we are very pleased. And I suppose I should highlight that we completed the acquisition in January 2020, for about $520 million US. This investment has repaid fully in less than 3 years. We've taken $650 million of dividends from Prime. So the deal has paid back for itself, and we still have material reserves and production and a very good outlook for many years to come from these assets. And just to, again, show you the robust financial performance from our Prime investment, this is the net debt position, again, consolidating 50% of Prime's net debt with Africa Oil's cash position. And as you can see, there has been significant deleveraging since 2021. And as I mentioned earlier, the consolidated net debt is currently at an insignificant $3.5 million. I think it's also important to highlight the performance of Chevron on OML 127. They have significantly reduced the volumes of flared gas, and that is through investment and performance enhancement on the Agbami FPSO. And we are very pleased with that, because obviously environmental performance is increasingly significant and important for all companies, large or small. So we're very pleased, and as you can see, since the acquisition of our interest in Prime, there has been a downward trend in gas flaring, mostly from the reduction on the Agbami field. We do have an exciting period ahead of us. It's all underpinned and supported by a very robust balance sheet, strong cash position, good liquidity headroom. So what are we looking forward to? Well, most immediately, we're all very excited about the Venus appraisal drilling. It's ongoing, and we hope to update our shareholders in coordination with the operator Total Energies and our invested company Impact Oil and Gas on the results when they are ready. As well as the appraisal of the Venus discovery, which was highlighted by Wood Mackenzie earlier this year as the largest discovery worldwide in 2022, there's also follow-on exploration. So there's the Nara-1 well on the westerly extension of Venus, and that is a high-impact catalyst as well. The Africa Oil team continues to screen and work on potential acquisition of strategic producing assets. As I mentioned earlier, we're also working hard with our Prime colleagues, and Prime, in collaboration with the partners on OML 130, are pushing as hard as they can to get the OML 130 renewal done as soon as possible. The renewal of OML 130 would then trigger the refinancing of Prime's RBL. That would extend the maturity of Prime's debt facilities, and it will increase the borrowing capacity as well. And that would provide optionality and flexibility in releasing more dividends from Prime to Prime's shareholders, including Africa Oil. So that's an important milestone for us this year. And we have our Block 3B/4B, which we operate. Why am I highlighting Block 3B/4B? Well, it's in the Orange Basin, where we have, it is close to the discoveries on Venus, and Shell has also made discoveries. Orange Basin is currently the hottest exploration appraisal emerging petroleum province globally. And other than our interest in Venus, we also have Block 3B/4B, which we operate with 20% interest. And you can find more information on that on our website in our corporate presentation. So exciting time ahead for the company over the next few months. And on that note, I'll end this presentation. And I suppose I should also remind everyone that what I've just said comes with its regulatory disclosure requirements, and you can find all of that on our website and in our financial disclosures for first quarter 2023. So that's all for me, and happy to answer questions.
I would first like to talk about Kenya, or no, sorry, I mean talk about Nigeria. So the new president, Bola Ahmed Tinubu, is to be inaugurated in a week. What is
Yes,
your expectations in terms of a license renewal of OML 130?
we hope it can be done before the inauguration of the new president. That's our target, which means next few days. It's no guarantee, but there was an article published last week in the Nigerian press. Deputy Managing Director for Total Energies in Nigeria made the statement that all partners are aligned, and there seems to be alignment with the government as well, and there could potentially be a final sign-off by everyone by end of this month. So fingers crossed. No guarantees, but that's the aspiration, and I know that's almost like imminent, a matter of days.
Great. And in terms of the PIA that they changed that every company, each company that flares gas has to pay a 50% net income tax rate. Has that issue been resolved, or what's the status on that?
It hasn't been resolved, to the best of my understanding, and I believe it's ongoing. I think imposing that penalty on companies operating in Nigeria, in my opinion, is a red line for industry. And that was something that was proposed in the finance bill. So if companies have converted under the new PIA terms and are no longer paying petroleum profit tax but paying corporate income tax, and they were expecting 30%, and now they're getting hit and the tax is 50%, is a red line. It's actually that finance bill provision is in conflict with Nigeria's Petroleum Industry Act. It hasn't been resolved. I suppose what we take comfort is that the new president is business friendly, and he recognizes that Nigeria does need to attract foreign investment in its oil and gas industry long term. Nigeria obviously has got a very difficult struggle. The treasury probably needs to maximize near-term income because of inflation. The subsidies has really hit them hard. But on the other hand, they need to make sure that investment keeps coming into the industry so that the production is maintained, because longer term, that's good for the country as well. And so we expect that the new president would take a pragmatic approach on this, and let's see where we get that. But based on my understanding, it hasn't been resolved yet.
Thank you. And so let's go to the worst scenario, that there's not a license renewal this year. You will repay the RBL facility by the first quarter next year, and but if there's not a license renewal, could we expect any dividends from Prime this year, or how's the discussions going?
So yeah, I mean, look, I think first comment is on the scenario that there is no license renewal until next year is a very conservative one. And even if the license renewal doesn't happen, we still have we will have very strong cash flow from operations, and Prime effectively becomes debt free. And if the license renewal was to happen next year, it would give Prime optionality to do a debt facility at that time again, on the back of a new OML 130. So I suppose it's just a case. The question here is about the phasing of the dividends. So instead of getting dividends middle of this year, you might get them end of first quarter next year. It's not as if we need the money. I mean, we've got plenty of cash on the balance sheet. It may constrain some of our optionality, but it's not a big issue. But direct answer to your question, whether Prime what could it pay in terms of dividends this year, I can't really say. Depends on a number of factors, right? Depends on oil price and the timing of the cargoes and so on. So I think it would be inappropriate to sort of give a short-term guidance on the outlook for dividends this year. Anyway, let's give it a few days and see where we are with the OML 130 license renewal.
Sounds great. And so let's take the positive scenario. There's a license renewal this year. The RBL facility is renewed for another 7 years. how are you planning to deploy the generated free cash flows? Or could you add some color on that as well?
So let me see if I understand your question correctly. You're saying that, okay, in a positive scenario, OML 130 is done, there is refinancing. What is Prime going to do, or what is Africa Oil going to do with its future dividends from Prime?
You could take both, actually,
Okay.
because I mean, it's not. I guess it's not for granted that everything will be dividended out to Africa Oil.
Yeah, and look, I think that's a good point because look, we have communicated with our shareholders that we are looking at opportunities, and our focus is producing assets offshore West Africa, and obviously doing that would mean that we would like to have more money from Prime because that would increase our optionality of what we're looking at. But we have also told the market that, well, look, if there is a good opportunity, deep water offshore Nigeria, then it would make sense to do it through Prime. So there are a number of scenarios out there. And one is that if Prime finds such an opportunity, it would make sense to use Prime's cash flow for that acquisition opportunity, right? But obviously the shareholders would also want to maximize their dividend receipts from Prime. So it's a kind of a balancing act here. Another thing that you have to bear in mind is that if there is an OML 130 license, another positive takeaway from that is the Preowei field. And I think that partners would be aligned on the back of an OML 130 license to, push forward to final investment decision for Preowei and develop that field. So Prime will also have capital investment requirements for Preowei in the next couple of years if FID was to happen this year. So that's another point that we need to be, including in our equation when we think about the capital allocation from Prime. But certainly our expectation is that OML 130 license renewal this year would unlock more dividends from Prime to Africa Oil. And I just don't want to speak about the timing and the content or the size of those dividends right now. I think it's not right. We will update the market in due course on that. But yes, an OML 130 license renewal this year, our expectation is that would unlock more dividends. Yes. Now, the second part, what would Africa Oil do with those dividends received from Prime? Again, we have a number of options when we think about capital allocation, and it's not just about acquisition of producing assets. It's also about shareholder capital returns. And look, some people may still be critical, but look, the headline speaks for itself. A company with a market cap of close to $1 billion has returned $80 million through share buybacks and dividends. And I think that's quite telling. And we still have aspirations to build on that. So we could do more buybacks. That's a possibility. And of course, but buyback decision also depends on the share price. We also need to see how the share price of Africa Oil responds to Venus catalysts. But yeah, I mean, if we feel that our share price is undervalued, share buyback would be a powerful tool and a very meaningful way to return capital to shareholders through the buybacks. I've said a lot without really saying much, but that's my position. So sorry about that.
So the spud of the first infill well at Egina was made in February. So could you give us an update on the infill drilling campaign, and then maybe when do you expect the results from the Egina infill to be released?
Yeah, so the campaign is ongoing, and we will update in due course. Right now, I'm not in a position to give a technical update. And when we are ready, we'll probably get someone more qualified to talk about drilling than an IR man. But yeah, look, you could expect to see that, latest with our second quarter results. But yeah, I don't really want to get into the technical detail. Just simply, I'm not qualified and I don't have the latest information in hand.
I see. Okay, so I'm not sure if you can answer this either then, but what is your expectation? Do you guys think that it will increase the production, or is more of a mechanism to arrest the production and decline for the next couple of years?
Yeah, I mean, it would be arresting decline. That's the priority here, is to arrest decline. And I think it's important to highlight that a meaningful incremental production is more likely to come from a project such as Preowei.
Yeah.
But it is very much about arresting decline. And look, I mean, we do have very good fields and we have very good operators. Egina, and I'm sure some people follow the monthly production data that comes out of MUPRC in Nigeria. And the decline may have surprised some people, but bear in mind that there has been no drilling activity on Egina since it first came on production. It's encouraging that the program is underway. And it's going to be a combination of, just a few minutes ago, I said I'm not going to talk about drilling, but you guys have got me talking about drilling. But anyway, let me share my thoughts. So if you drill an injector well, what is the concept? What's the objective of an injector well? Well, you're trying to repressurize the reservoir. And once you've drilled, completed, and put that injector, and that is actually the first well that's being drilled, is an injector. It takes time to build up pressure. It's not like you turn the light switch on and off. You have to give it time before you get to see the performance in the reservoir. And of course, there's going to be producers as well. But really, the important point here is that primary objective is to arrest production decline.
Yeah, and then just briefly to confirm on Preowei, I mean, the plan is still like you will make a final investment decision subsequent to a license renewal of OML 130, or is there something that could change that, or is that a steadfast plan still?
No, I think OML 130 renewal would be a very important trigger point, catalyst, milestone, whatever you want to call it, for Preowei. Obviously, there has to be engineering work to be done to firm up, then you probably need to go to industry to get bids or get cost indications, right? Because when you want to do your final investment decision, you need to have a good grasp of how much it's going to cost you. I expect that exercise needs to be done as well, perhaps. But no, look, the OML 130 license renewal, in my opinion, is the most critical milestone in the Preowei plan.
Yeah. So will these cost estimates and studies, more detailed engineering be done before the OML 130, or will that be kind of like that needs to happen first and then you can?
A lot of it has already been done. A lot of engineering work has already been done. My understanding is that front-end engineering design work, a FEED study, was done previously. So it's not as if you've got to go to the drawing board and start from scratch. A lot of work has already been done. But yeah, and some of that work has been ongoing. It's not as if it's been completely stopped. But I think really it's having that renewal in hand. That you've got another 20 years and you have clarity. I think it's then where the partners will be fully aligned and say, look, all the technical, all the commercial stuff, all the cost analysis has been done, but now we also have the license renewal in hand. That removes that big stumbling block in your final investment decision making.
Yeah, so I'm being a bit annoying here. I get it, but so from the renewal, how much are we talking? How many months until an investment decision? Do you think approximately?
Look, there can be no guarantees, right?
Of course.
I can give you something, and what I'm going to give you is not a corporate guidance.
Of course.
It's not a guidance from Prime or the operator. This is me as an individual who was a former sell-side analyst and a former engineer. And I said I'm not technically qualified to answer your drilling question, but now I'm telling you I was an engineer. But look, as a free-thinking person, if I was to give a guesstimate, it could happen by end of this year, possibly, but no guarantees.
Yeah, and then the final question on Nigeria. So, could you fill us in on the status of the $305 million prime security deposits from Equinor? What's the progress there?
That question keeps coming up, and my answer is that I don't actually think about Equinor security deposits anymore. That money has been received by Prime, and it's in its cash balance. And I suppose I should ask you a question and turn the tables. What specifically are you thinking about the Equinor security deposit? Can you be more specific on what you want to know?
Okay, so yeah, I mean the deposit has been received. In the past, I think Keith has in some quarterly conference mentioned that it would be dividended out to Africa Oil. So that was sort of the
Exactly.
reason for our question.
Yeah,
Shareholders seeing the cash now.
yeah. I suppose the shareholders have looked at it because obviously, Prime received, and I think that to Africa Oil was about $152.5 million. And that obviously goes in Prime's cash pot. So if you look at Prime's cash balance, that money, some of that money is still in there, right? So I suppose the question is not so much about the Equinor security deposit, it's about what's going to happen to Prime's cash balance.
Yeah.
And we reported our share of Prime's cash balance at the end of first quarter. And I can build on that. I can say is that, well, look, traditionally Prime has maintained a minimum cash balance in order to, have liquidity headroom to run its business. And traditionally that's been about $150 million or $75 million net to Africa Oil. It has other obligations. It needs to pay its share of OML 130 license renewal. It may have to pay its share of OML 127 license renewal. It may have a nice acquisition opportunity. So there are other things, there are other causes or other reasons for it to hold some cash. But obviously, there's also surplus that needs to be distributed as dividends. So I suppose I'm trying to steer you to is just think about Prime's cash balance. And your question should be, what is Prime going to do with that cash? And I'll try to give you some tranches that may be, including dividends to Africa Oil. But I wouldn't really worry too much about, what was received from Equinor a couple of years ago in terms of security deposit, what's going to happen to that. It's not a separate cash pot, it's part of the same big Prime cash pot.
Sure. Okay, so I think let's move over to Venus. So Jasper, you can take the first one.
Yes. So, okay. I mean, last time I checked, Deep Sea Mira is in Volvis Bay, so in a couple of days it should connect. And in the first batch of drill results, I know you get this question all the time, but I would still like to ask it. Will you include the flow rate tests? And I guess it would only include Venus.
Well, yeah, I mean, that's a very good question. And I suppose my answer is that discussions are always underway, right? At the end of the day, we have to take the lead from the operator and our investee company. So whatever we announce in terms of results will have to be in coordination and ultimately with the operator and the partners. I mean, bear in mind, our effective interest in Venus is through a shareholding in Prime, which in turn is a partner on the license. So we have to take our lead. But it's also important to note that Africa Oil is the only publicly listed independent oil and gas company that has an interest in Venus. So the results of Venus will be much more impactful for our share price than, say, for Total Energies, right? Just because I'm so much bigger. And if there is a lot of volatility in our share price, then I suppose we need to, again, go back to Total Energies and Impact and see what scope there is, if any, in announcing results. But your question was quite specific, and it mentioned flow test results. And I believe there is a preference by the parties involved that the results would have to wait, or an announcement has to wait until we have the flow rates. But not necessarily to wait to have all the well results and all the flow rate. We will be pushing to have, for example, if the drilling results and the flow test results on Venus 1A are available, to announce it at that time, because that would be material for our shareholders. Another point to note here is that certain industry media outlets have been ahead of the crowd in breaking the news. And if that happens again, I think it's only just for the publicly listed companies with an interest in Venus to announce results and not allow leaks and rumors to drive the narrative and the discussion.
Sounds fair. And I mean, nobody can predict the flow rates, but at 3,000 meters depth, what rates would you have to see for it to be economically viable?
Well, again, what is your oil price deck, right? At 200 oil price deck, it could be a much lower rate. So bear in mind when we talk about economic viability, it's just not one parameter. There are myriad parameters that you need to think about. What I can say is that, for example, Wood Mackenzie have done their economic analysis and they've had reports out in the past. And I recall that they had an assumption of 7,000 barrels per day, and that was a very economic field at that assumption. And I think they were using $60 or $70 long-term price. Even at $50, it was economic, if I recall correctly. I think what is interesting here is, and maybe I'm repeating what Total Energies CEO said in a recent investor call, is that there's a lot of encouraging static data that is very encouraging. So much so that Total Energies is actually spending half of its exploration budget on this campaign this year. That's quite telling. So there's a lot of encouragement in this static data, but what we are missing is the dynamic reservoir. So that's coming soon. But again, going to your question, what could it be? I'm just pointing you to the data points out there. I think if you speak to some of our colleagues internally and looking at, a 60, 70, some people may have the belief that maybe even 5,000 could be economic. But again, you have to tell me what oil price you're using and what are your cost estimates. We're some way away from that. But yeah, I would say again, and this is not a corporate guidance. This is not just take this with a big fistful of salt. I would say maybe somewhere above 4,000 or 5,000 barrels per day, then that would be encouraging. Of course, it could be much more than that. Let's see.
Thank you. And after this year's drilling campaign, will you be able to book some reserves, or will there only be contingent resources?
Well, we can't book reserves because we're not at the license. Impact would have to book reserves, right? So there won't be any reserves for Africa oil, right?
Okay, no, I meant for Impact and Total.
I suppose if they advance a development plan, and this is again, and I think you do raise a very interesting question, because at Total Energies year-end results presentation, I think, and you can look at the transcript of that if you haven't already seen it. I think the CEO of Total Energies said that a successful appraisal program of the core Venus area could underpin a fast-track project. So it's not a case of them having to go out and spend a lot more time and money to do appraisal drilling. They'd be looking to fast-track a development project, and if they advance that, then and the independent reserves evaluator feels that the likelihood of a development project going ahead is very strong, then yeah, you would be getting to the point where you could book reserves. Is it going to be end of this year? I think that would be a bit early. It's probably going to take longer than that. But I suppose the other question you could ask is, well, would the operator or Impact give an indication of the recoverable volumes if there is a commercial project? And as a shareholder in Impact, of course, that is something that we would love to see, right? To give people the important data point in the valuation for the project. What is the potential recoverable volumes? And that is something that we need to look at very carefully at the end of this year, because we'll have so many important data points from the appraisal and exploration on Venus and Nara. And that is something. So even if you have contingent resources, I think that would be very good.
And in terms of Africa Oil, when would it make sense for you to exit after the reserves has been booked and it's time to make a final investment decision, or perhaps?
At the time when we get that really, really, really attractive offer that we just have to take. It's about the counterparty buying, putting a table. And bear in mind that it's not just an Africa Oil decision. It's a decision by shareholders in Impact. Yeah. But I think, my understanding is that the Impact shareholders are aligned and they see that a successful appraisal program this year could set the scene for a potential exit. But again, we've got to see what offers are received. And if there's a good offer there, then yes. But I don't think it's necessarily going to be driven by where we are in booking contingent resources or reserves. Because a buyer is going to be a major, they are going to be sophisticated, they're going to take their own technical view on it, and they probably have their own estimates on recoverable volumes and economics, and they'll make you an offer on that basis.
Great. And the 95 million that you raised in Impact this year, how long will it last? What's the run rate?
I will refer you to a press release by Impact that came out when they announced their open offer to their shareholders. In that press release, they did say that the money targeted would pay for Venus 1A, the DST of Venus 1A, the sidetrack of Venus 1X, the DST of 1X, drilling of Nara 1X, and floaters of Nara 1X. If Nara 1X is successful and the flow test is successful, there's a contingent well to appraise the Nara extension. So that would be Nara 1A. My understanding from the Impact press release is that for that contingent well, they may need to raise more money.
Okay, I think that sums it up for Venus, and let's get over to Kenya. So it's been a long journey here, and you've decided to finally, let go of the Kenya project. Could you kind of explain the final rationale that went into this decision?
Yeah, I mean, look, I think first of all, it's very important to highlight the positives. I mean, Kenya. Some people may say, "Oh my God, this was a failure." It wasn't a failure at all. And recall that Africa Oil farmed out. I mean,
yes.
Look, first of all, we were the first company there. So we have 100%. Then we brought Tullow in as the operator. We have 50-50. We made the discoveries. And then Africa Oil farmed out. So we went from 50 to 25%. And we farmed out 25% to Maersk E&P, which was subsequently acquired by Total Energies. And we took a big we got money, we got cash through that farm out, and we took that cash and we bought Prime, or 50% of Prime.
That's been good.
That has been a fantastic investment for us. So Kenya has been, as far as I'm concerned, it's been a huge success. But yes, of course, it was a difficult decision because a farm out process on Kenya commenced, and that involved all three partners, and that commenced in 2021. And it's just taken very, very long time. And you may recall that in our Q4 2022 results, we took an impairment for about $170 million US. And the commentary that went with that impairment did say that, look, it's just taking so long. And we think that the likelihood of a farm out deal, which is critical to getting to the final investment decision for the project and getting it into development, is unlikely, or the risks have gone up significantly, and we still have that view. At the end of the day, you've got to take a step back and think, well, what is the likelihood and what is the cost for maintaining that option? And then you need to stay true and disciplined to your strategy. Our strategy, as we mentioned in the press release announcing the exit, is that, look, we're very much focused on production offshore West Africa, and we have this very attractive exploration campaign. And right now we have the appraisal of Venus 1A. You have to stay disciplined and you have to stay true to your revised strategy when it comes to capital allocation. And you have to make those difficult decisions that, look, you don't believe it's going to happen in a timely manner and you have other opportunities. It is better to redirect your capital allocation. And that is where we got to. And as you would have seen from the Tullow's press release as well, it wasn't a decision that just we made. It was also a conclusion and a decision made by Total Energies. And now Tullow holds 100% of the project. Look, we think that this is a good asset and it's an attractive development opportunity. And we really, really wish the best to Tullow and the government of Kenya in their efforts and in what they're doing to get the project to the next stage.
Yeah, I mean, let's hope it goes well. They don't have the best balance sheet, Tolo, but Africa needs more energy, so hope it works out.
Yes, and that is such a good point that you just made. Africa needs this.
Yes, they do.
Despite what the Western liberals, and I see this as a new form of colonialism, they are almost like ordering Africans not to
industrialize.
It's just ridiculous, and Africa needs this. It needs it for social, economic development. So I really, and I feel very passionate about this, and I love Kenya. I love Kenyans, and it's just been, it's for 11, 12 years I've been following this project, and I really, for the sake of the Kenyan people, I hope it happens. Yeah.
Yeah. So in terms of from your guys' point of view, do you have any outstanding obligations that you need to fulfill before leaving Kenya? And what kind of cost savings will you get from leaving now? How will that affect your economics?
Well, look, I mean, you have to look at our financial statements for all the detail. There are payables. So I encourage you to look at our because look, I'm always very mindful that on these forums, things may be taken out of context. So on this particular point, I really want to direct you to our financial statements and the detail in the financial statement, because that's where in black and white you get the position. So yeah, I mean, look, there could be certain costs associated with our exit. Are they set in stone? No, they could move about, but they are included in our financials. In terms of savings, well, look, it's not so much about savings. It's about chasing the opportunities that we feel are right for us.
Yes.
And are in line with our strategy.
Yeah.
Because look, we're a small team at Africa Oil, and I think we do punch above our weight. But one thing that is an intangible is the distraction of the management time. That's something that we should also talk about.
Of course.
And Kenya was quite time intensive. If we can free up our highly capable and experienced management to pursue other opportunities, then I think that is a big plus, which you cannot put a number against it. And I think it's a good point to highlight that recently we picked up those 2 production sharing contracts in Equatorial Guinea. And in particular, we're very excited about EG31, for example. That's an infrastructure-led exploration opportunity in a mature province in close proximity to existing gas infrastructure. And I think that really does explain this revised strategy and what we are trying to do. It's really about, putting all our effort into boosting near to medium term cash flow profile. And I think in Kenya, we just felt that, even if we'd stayed in, the cash profile was too far into the future, perhaps.
Yeah, makes sense.
With that, I would just like to ask a short question on Africa Energy. So, I mean, could you give us your personal outlook on Luiperd, Brulpadda, or Block 1112B? I know you submitted the production right for Luiperd in the September last year.
Yeah, I mean, look, Block 11B12 is in my opinion, is a fantastic block. It's fantastic acreage. On the Preowei Preowei, you've got 5 targets which look very similar, identical on seismic to have been drilled, and there have been very good gas condensate discoveries. And other than the Preowei Preowei, to the east of the block, you have the Luiperd opportunity. And so there's a lot there. And sometimes, subsurface may be great, but you need to get above ground issues lined up and sorted. And I think what the partnership doing there is the right thing. Is you have a very good discovery, and Luiperd, I believe, is the primary objective to be developed. It is close to offshore gas infrastructure, and you have the market in Mossel Bay nearby. So I think that is a very compelling project to supply the domestic market with gas, and then obviously you have the liquid cut, you have the condensate that could boost the economics as well. But as it is a gas project, sometimes the gas value chains take a bit more time to be aligned amongst the various parties and stakeholders. And to me, it just appears that it is taking time. We just need to let the partners and the operator to get on with the commercialization efforts in that. And hopefully, in due course, soon we will see a development plan that is bankable and doable.
Yeah. And then finally, a bit on the strategic front, we've seen that the Lundin Group has started to exit Africa Oil. And have they communicated this to you ahead of time, or has the kind of relationship faded away over time? And did you get any motivation from their exit?
Well, they have fully exited now.
Yeah.
I personally found out about it the day before there was a DI article in the Swedish press.
Yeah.
Look, I mean, I don't expect portfolio managers to call me up and tell me what they're doing. It's their prerogative. If they don't have a regulatory disclosure requirement, and in this instance it appears they didn't, then it's their prerogative to buy or sell without telling the company. They don't have to. I think we all thank the Lundin Group. They've been, they're phenomenal value creators, and I think they may have left, but they've certainly left the Lundin DNA. We still have that, which is about hiring the right people, experience, entrepreneurial people, and empowering them. And we'll still have that DNA. And forever, we'll be grateful for Lundin family and the group for the support over the many, many years. They've been fantastic.
Yeah. So in terms of losing any people, there are no implications from them exiting. I mean, I know you had at least a board representative previously.
No, we still have a board of directors that been working. Some of our directors have been working with the family for a very long time. I mean, our chairman worked with Adolf Lundin,
of course,
going back decades. And so, look, as of now, no, I think it's business as normal. Just get on with it. And exciting few months ahead of us.
Yeah. And then I wanted to ask a bit more strategically. So beyond Venus and Nara, there will be liquidation events at some point, of course. What is the long-term strategy for Africa Oil? Where will you focus on trying to deploy your capital and create further value for shareholders?
Well, I mean, look, stated objective is to pick up more producing assets. I think we look at our prime acquisition with great pride. Is trying to replicate that success.
Yeah.
So that said, I don't think we are going to get into an undeveloped or into a development project where we would have to tie up our capital for many years. And obviously we've got good exploration team. I think some of our cash flows could go towards compelling exploration opportunities as well. But really the focus would be through boosting the production base, and that may have to come through M&A.
Yeah,
we'll see. But yeah, as I said, it's about that entrepreneurial flair in the organization. Sometimes you see an opportunity that others have overlooked, and you just go for it, and you create value. And that may require an extension of the strategy premise, right? But we have to be nimble. We have to be nimble and move quickly. And I think that's really the most important factor for an independent to be successful.
Yeah. And in terms of your focus in Africa, is it on the west coast of Africa, offshore, or are you seeing things onshore at other places as well?
The focus has been offshore West Africa, but again, we do look across. The focus has been West Africa, but look, we don't dismiss other geographies just because we are just all set on one particular area. No, there is flexibility. But there also needs to be direction and focus just to make things more productive. But to direct response to your question, we can consider others as well.
All right. Okay. Thank you for your time, Cheyenne.